All right. Hello, everybody. Thank you so much. We are going to go ahead and jump into session 2. And for that, I will invite my fabulous colleagues up for this panel. First, I'll invite Christian Catalini, who's founder of MIT Cryptoeconomics Lab. Thank you, Christian. Next, I'll invite Ruizhe Jia, who's a professor here at Stanford in the Mechanical Engineering Management Sciences. I'm so sorry, I should have written that down. And last, we'll invite Shaul Walters up, who's founder of Eliza Labs. All right. So this session explores what happens as AI systems move beyond assisting human users and begin participating directly in open financial and economic systems. We can describe that as holding assets, initiating transactions, coordinating with other agents, and increasingly making decisions with autonomy. That shift raises some fundamental questions. What infrastructure will these agents need to establish identity and authority? How will we verify their actions and assign accountability? How might they change markets and other market participants? And do open systems offer distinctive advantages for enabling AI participation? So today with our panelists, we'll have the opportunity to explore this. And to start, I'm gonna kind of ask each of the panelists to talk a little about a piece of research that they've done or work that they've done in this space, and then we'll kind of dive into more general questions. So Christian, I'd like to begin with your paper, Some Simple Economics of AGI. You argue that as AI makes execution increasingly abundant and inexpensive, verification becomes the binding constraint. That the scarce economic function is no longer producing an output, but establishing whether that output is correct and trustworthy, et cetera. So first, can you just kind of introduce this concept and some of the ideas you talked about in your paper to the audience, and then speak to how the shift may impact the requirements of design, specifically in financial infrastructure?
Thank you. Yeah, so the paper was actually a follow-on to something that we have written about 1.5 years ago. After talking to some of the scientists looking at the frontier, trying to come up with an answer that was actually very personal, trying to figure out, what is still defensible, what is still human, what should we be all doing, what should startup focus on, what should incumbents double down on versus not. And we concluded that fundamentally, if something is measurable today, it will be automated. So that's kind of the short version of the first piece. If you believe that premise, then you start realizing that there's things that we do measure, and increasingly we can use AI to measure more things. So it's kind of a self-fulfilling prophecy on that front. And then there's things that are either in people's brains, the weights calibrated by our own experience, our own entropy, right, over years and years of errors, mistakes, things that we did well, things that we didn't do so well. And of course, the AI labs are working extensively to extract that. There's a whole cottage industry of institutions that have really come up with, okay, we're going to hire you, you're going to train, model, you're going to help evals and all of that. But fundamentally, I don't think we're there. So I think there's a piece of good news, although that frontier keeps moving. The models keep getting better and better. And part of it is, I'm an economist, so full disclosure, I don't believe in stories of extreme abundance, where it's like, okay, suddenly this is going to release every constraint that we have and everything is going to be perfect. Typically, when something becomes extremely abundant, like intelligence, something else inevitably becomes the bottleneck. And so the theory of the paper, which does some math, mostly to make sure that we were at least intellectually honest with our own assumptions, concludes that increasingly that last mile, and for those of you that have been in the blockchain space, the last mile has been also the pain and the Achilles heel of a lot of these blockchain implementations, whether it's in payments or financial services. That last step of verification is where all the value will accrue. Right now, there's actually a really interesting debate, even in DC, on the policy front between closed models, open weights models. I'm happy to go there if people are interested. But to me, that really reflects this pushback beyond the idea that, okay, the labs will absorb it all, and there'll be kind of these mega corporations that can perform any task. Or can we fight back with intelligence that's a lot more local, distributed, and also more in line with where tacit knowledge already is? I think if you think about what makes a startup or a company unique, or an academic department, is the tacit knowledge in the brain of the people that really form it. So now on to financial services. Financial services, of course, deeply care about trust and verification. I do think that having spent more than a decade in crypto, a lot of the primitives that have been incubated in crypto, I think are going to have a comeback eventually, because many of the side effects of AI, whether it's on identity, on provenance, on the digital trails that we're going to rely on, even on end-to-end verifiability of models, it's going to come back. It's going to be important. As usual, crypto jumps a few steps ahead, throws a token, there's hype and speculation, and things kind of flatten for different reasons. But what's meaningful to me is that as we delegate these agents more and more with important decisions, including financial ones, it's going to be extremely important to know that they're accountable, they're verifiable, they're acting on their mandates, and hopefully we can build all of that on more open networks and ecosystems. That's something that I'm deeply passionate about. That's why I got enamored with crypto back in 2013. Went through my own waves of disillusionment across the way on that. But now I see a lot of similarities in the AI space. And although I would say most of AI is very skeptical of everything in crypto distributed systems, what's interesting is that now people are very clever, right? They're renaming it as like, oh, don't worry, there's no blockchain or crypto. It's like Byzantine fault-tolerant agentic something. Again, excited about all of that. I think when it comes to our financial lives, if you think about the thesis of the paper, first of all, we're going to be able to measure a lot more things. And that's going to be great, because every risk in society is essentially typically misallocated, right? So it's on somebody's shoulder, but someone else with more capital, with more resources, is probably willing to take that on. And so I do see massive upside and potentially, may I say, democratization of a lot of these systems as we unfold all of this. But of course, the danger of some of these getting concentrated is always out there, which is why I think open weights are really important too.
Very interesting.
Do you want to comment?
Yeah. Oh, wow. I think that we're entering an age of abundance, and when I just get so many more emails, I get so many more comments, I get so much more coming at me from everything all of the time, and almost all of it is automated. All of it is AI, and people are just getting started. And when I look at something like verification, we've been working on a very hard math conjecture where we put about 15,000 commits across a swarm of agents in about 10 days. And if I had to verify any of that, I would actually not be able to do anything else. It would completely cripple my life, because the amount of abundance of verifications will start to stack up to I have to verify something every single second of every single day if I have any amount of this agent stuff working for me. And so I think that the revealed human behavior of a lot of this, because we've talked to a lot of people about the desire for verification, but this has to be something that's almost like an underlying just machine sort of thing for other machines to verify, because as far as humans go, we are not verifying any of this. Nobody's going to sit there and press approvals. The revealed preference is that decision fatigue will lead to people making more mistakes if they have to approve things, and they'll just auto approve, than the vast majority of those people being trusted to make the right decisions if they have to make hundreds and hundreds of them a day. And if we had to approve any of this, we would have to make hundreds and hundreds a day. So I think that the direction that we're going with this is blockchain is the road and the streets of the internet now. I mean, it's the easiest way for agents to pay and settle, and all this other protocol stuff is pretty irrelevant to me. I think we've already kind of solved it with the human protocols. But now we have these human protocols being overwhelmed by agents. And that creates I cannot use my GitHub. I cannot go and maintain PRs and review them. I get 100 PRs a day. I have to have agents going through. And so it's not just that last mile is itself now turning into my agents are interacting with you, because I just literally could not beat the scale. I would never be able to get my work done at this point. It's just way too much coming at me.
All right. Well, I guess maybe we'll dive into that a little bit more in just a second, but I want to take my next question to Professor Ruizhe. In your research, and specifically something that you presented through the FDCI a couple months ago, the price of participation, you use Hyperliquid's public blockchain data to reconstruct the interactions among retail traders and market makers and more sophisticated traders. We'll call them the sharps, to uncover the costs that are difficult to observe in traditional markets. So kind of bringing your perspective into this discussion, if AI agents begin trading on people's behalf, I guess first, are they anything more than algorithmic traders? Like, is there a difference there, or is it just the same thing? That's something I'm quite curious about. And then to your research, if they are or are not, like, what observable behavior would tell us if these types of new participants are affecting the market microstructure or changing it?
Yeah, I think, thanks for the question. First, I think end-to-end agentic trading is so far a scam because you see people raise huge amount of money for that, and you see people say this can potentially improve your ability. But if you log into, just search for Alpha Arena and look at the leaderboard, most of those agents blow up. So they're essentially coin flip and paying some fees. Why is that the case? So if you, because I had background, I used to be in quantitative trading. So the best hedge fund in the world, think about the most competitive business like US equity, the best can do is like maybe you can predict 6 bips, which is 0.06% over across different tickers, which means the volatility overall may be like 4%, 5%. So really you're trying to extract that signal of like 1%, and we need to use very, very accurate, like extremely well-trained statistical model for that and very scientific method to get that 1 bips of edge, 2 bips of edge. How can you have a just agent training on text with, it's even hard to do RL because the signal to noise ratio is so low. So eventually the result is people don't understand how difficult quantitative trading is, which why it's easy to really risk money for something probably is a dead end. On the other hand, you do see all the quantitative trading fund who really understand the science of trading, they are making a lot of progress on both agent and alpha modeling and so on, and they do use AI differently. So you can see the gap of the normal user and the quantitative trading fund going to be larger and larger. If you realize how much money they have been making for the past few years and how much the growth of that, most of all the fund like HRT, CS Security, and Genstrate, they made a lot of money this year and way more than what they had before. Some because of market, some also because of their advancement on technology. So I think the gap will be bigger and bigger. It will be more likely to be used on people who have private knowledge, who know the science of it, who know how to best leverage this new technology. Where if you want to have end-to-end agentic trading, either is a scam for VC money, and also if you're part of the using that, you're also going to be a noise plus some negative drift from fee. Yeah.
I have a lot to add to that.
Go for it.
I created a thing called AI16Z, which was an autonomous investor. So, how did we do that without being a LARP? Well, AIs cannot trade. They cannot make good decisions. They are not trained to predict the future. They are not magical. They're not super intelligent. They are trained on our data. There's a lot of people think when they say AI trading, what they think is the AI makes me money. They're actually not talking about like, oh, I go to a chat and say swap this for that. They're talking about I want it to make me money while I sleep. That is the underlying thing that they want. There are ways to use LLMs to make money today consistently all the time, and it is not like just going and looking at the top 10 tickers and buying and selling. Like that clearly, as you said, it's literally a coin flip. In bull market, they all lost money. Now, what are some of those ways? One is people are actually really good at predicting and have access to insider information. So let's say you have like if you look in crypto, you have this kind of degen sort of like Telegram chats where people are basically shilling very low market cap, very easily manipulated by social information kinds of tokens. And so if you were able to take those unstructured shills, like, yo, I just bought this thing, or oh, that's garbage, totally trash, Dev's a scammer, you could take those and use that, convert that to function calls as social information, which could put paper trades. I'm not going to buy real information, but could I, if that person shilled that and I had bought it and then sold it at the top, would I have made money? Then I can start to build an aggregate trust score of the people who are trustworthy and not. And we did this, and in backtesting against our corpus of people in our trenches chat doing this in the bull market, some people are like 30% success rate scammers, and some people are 90% success rate. Like they clearly know something I don't know. And if you were to buy that consistently, you would have made a lot of money because These are people who spend all day plugged in doing nothing but predicting the prices of these coins and chatting about them. And so I think that there is enormous like opportunity and arbitrage and that kind of thing. But if you're like, yeah, let's just have it go out and buy stuff, like, now, the other thing that we noticed is like the new models are really, really, really good at making trading bots. And what you do is you say, hey, here's all the backtest data, here's the whole corpus, do the whole thing. Just keep grinding on this until you can demonstrate, oh, that looks kind of good. Probably that's overfit. Now take, exhaustive search, 10 other variations on that, try to detect the overfit. And if you can grind out as a function of compute, you can make like an extremely good trading bot that follows all of the traditional patterns. And you're not going to beat Wall Street. You don't have like access to the, you can't move that fast. But in the aggregate, like there is something there where like you can definitely beat the market. But again, I don't know if you can beat the market, but you can at least make like something that's relatively competitive with like, what Wall Street's doing. But you're not, like the LLM is just bashing away at this over and over in the back end, and then you take the LLM out. There's no LLM decision making. That clearly is never going to work, if that makes sense.
It does. Any comments, or I'll move to the next one.
Maybe that's
Okay. So I want to stick with you, Shah, and talk about Eliza. I mean, I think you've given a bit of a description about it, but if there's anything you want to add there, then go for it. And I guess my question for you is, from actually putting agents into environments where they have goals and can interact with participants and they have learned behavior, the difference between an agent what have you learned about the difference between an agent that appears autonomous and one that can be trusted with meaningful financial authority?
I mean, this is all beta testing, right? Like I don't know if I would trust any. I've given agents money. I've had them leak their private keys. I've lost a few thousand on various, I've watched them lose all their money trading stupidly. We've done like pretty much every mistake and everything you could possibly try in this space, from the total LARP to the like very scientific. So Eliza kind of got popular because we were like, well, let's start from social agent that's open, anyone can talk to it, and then let's give it a wallet. And now, like, well, who can call the wallet actions? Why would it do anything? Why would it respond to anybody? And that then from that follows like just a whole lot of different security things. Like, why doesn't OpenClaw have like role access? Why can't I put it in a group chat and say that person is your boss and no one else? The very basic stuff we have in Linux, like why not just apply that to the whole world? And I think that there's like prompt injection security, there's like role access and like individual content access controls. There's like guardrails to make sure, like ideally you can simulate execution like locally before doing it out into the whole world. And you need you just need all of this stuff. And even then I think that like it's the models, it's gonna be a very different conversation in like 2 years. Like it still just feels like early days of self-driving. I don't know if I would get a self-driving car, It's like,
yeah,
no,
that makes sense. Okay, but what you're referring to is kind of a broader vision of some of the infrastructure pieces that need to be in place for AI to be participating, we'll say autonomously, in financial transactions, like point blank. So, I mean, Christian, could you talk a little bit more about how you see that? Like, does identity matter? Do we need to be able to, identify provenance, or how do we kind of think about the infrastructure stack that needs to exist in the financial space for AI agents, and especially autonomous agents, to kind of continue to grow and participate?
Yeah, maybe there's really two parts to that. The first one is the one you were already hinting at on the security, right? So it's very clear that these are probabilistic systems, and for a number of other reasons, we'll have to figure out how to design proper guardrails around them. But even if you assume the security problem is solved, there's all sort of other nuanced elements to it. And actually, I'll take an example now from finance. Everyone is rushing to throw these agents into their Slack channel, their teams, there's Cloud Tag. And I don't think they've actually observed what that will do to their organization, which is essentially now you're introducing an entity that has a socialization score of 1. It will converge every idea based on what it can actually measure, what it sees, not what's not measured, again, what the people have in their brain that they haven't codified on Slack. And you've essentially created something that will reward everyone within that same institution to go for the short term There was this post about from hierarchies to intelligence that was published, by Dorsey and I think a GP from Sequoia some time ago. And the whole idea is like you don't need any more middle managers in the organization. You can just throw an agent, and that will be your middle manager. I think as we introduce these systems into society, and financial markets are notoriously adversarial, we should be very mindful of how they're biasing or influencing certain types of conversations and interactions in a certain direction. If anything, maybe the biggest alpha trade, as these agents come online and will trade and make all sort of operation, is the contrarian one, which is like, okay, what would someone not using the agent do, given that everybody else is using the agent? But beyond that, I do think that, security solved. Let's say people are careful with some of these side effects of like extreme socialization on what's actually measured. If you can connect them also to what's not measured, and that's where, I agree with you. I mean, you cannot do verification on the PRs anymore, but you'll have to build a system, and you probably already have, where your judgment comes in. Some people call it taste, curation, judgment. I just like to call it measure versus not measured. I think it's much cleaner because what is taste? I don't know. You built a system that allows you to still review the PR that really matters or the architectural problems that may arise from it rather than sending it on autopilot. And so I think that's the nuance, and that's where I think these agents will bring massive utility to consumers, businesses, financial services, a lot of things that, when you think about it, just savings, planning for your life, allocating your risk, these are expensive services today for most people. I look forward to a future where everybody has that out of the box. You don't need financial literacy if you have proper systems in place. So again, there's a lot of steps along the way, and people will get burned. It's going to be very similar to early days in crypto where, yes, these agents will go out and people will scam them and will do all sort of things. But long term, I think what's on the other side, I think to me, it's really empowering. And I think we should look forward to that in financial services. I know this is going to make some of the banks and payment system providers and others more nervous, but I think it's a good future. It's a future where we can have more agency through these agents.
Yeah. So on-chain markets seem likely to become some of the first environments in which AI agents may participate economically at scale. They've certainly been maybe test environments, but their openness and accessibility makes them likely targets. They're programmable, continuously accessible. So do you agree with that? Do you agree that DeFi markets are kind of like, some of these open markets will serve as early experimental places for agents to be participating?
I mean, Anthropic is like putting a huge amount of effort into this. They're doing a lot on chain, a lot in crypto. They have reinforcement learning with verifiable rewards is like something that you can basically set up to say like, well, what is the reward that we can verify? And crypto transactions are really easy to sort of formulate into that. It's very deterministic. They are running like simulations on their own chains, and then also running against like the entire network. And then they're also looking for like vulnerabilities in existing smart contracts and attacking all of those. I mean, they like OpenAI and Anthropic are not going to be like, yeah, we're pro crypto, but like a huge amount of what they're doing is in this space actually. So just looking at revealed preference,
Sure. Do you see anything in markets that you're looking at, Professor Jia?
To me, I think the only benefit of going to DeFi so for trading, I think you still need I have a debate with my colleague, but you really need a scientific method with some code properly. Either you have alpha and you have monetization, both have to be very hard-coded at. On the other hand, I think the only reason people go DeFi is either it's easy, you can have API, and it's just accessibility. Mm-hmm. If you connect agent for stock market, it's just now easy, and the data stream is now easy. So I don't see how, in terms of access, in terms of just, I don't see like it's a better for some other property. On the other hand, I think on-chain market is, so if you look at, for financial research, financial studies, one thing typically are concerned about is there's not much interoperability. A lot of things are statistical. I think if you want to understand the physics of finance and so on-chain is a good place, especially now with prediction market and hyperliquid. So the data is actually valuable. but I wouldn't see like on-chain as someone the agent naturally participate. I have a huge doubt for that. Okay.
Maybe one thing to add. What I think is great about on-chain is it's like the fruit flies for whatever comes next. It's such a environment where you can tweak a number of parameters and just get instant feedback, to your point. So yes, I do think some of these early, if you think about it, we mentioned self-driving, right? So the different levels, you can go end-to-end all the way to self-driving on-chain. You cannot do that in the traditional financial system as easily. So yes, I do expect people to experiment with like agents that have true property rights of sorts and go and build things. We're going to see more of that. I mean, you tried this before too, right? So yeah, the weird stuff will start in crypto.
Well, that thing you said of like what can be measured, the what can be measured is really crucial, right? Like, why do we like, it's deterministic. We can see the output of every single thing. It can, like that quality is what makes it really interesting to us for agents. Not like, yeah, as you said, it's not like some magical thing of, oh, agents are gonna rock the DeFi. It's a really easy training environment for us.
Yeah, actually, a very boring example from payments. This was actually an entity that's becoming OCC chartered, and they were telling me that the way they're distributing payments, actually, when they do it on chain, it allows the agent to learn much faster. Because if the payment fails, they have a lot more information along the chain of like what actually went wrong, versus if you're hitting an API endpoint, it's kind of a black box. That's a small example.
Interesting. So it sounds like there's consensus that blockchains in general provide a really good infrastructure for agent activity or agent training because of the level of transparency. But I mean, I guess just to expand that question a little bit, do you see there being needs within blockchain infrastructure or kind of like existing ledger infrastructure to actually like fulfill the potential that you expect with being able to support agents and training and that type of thing? Like, does the distributed ledger itself need to evolve in a way to meet up with this new technology?
I really think that like there are no agent protocols. Like, agent protocol is an oxymoron because the whole point of agents is they're trained on human data and human protocols to interact with the human world. And like the equivalent physically would be like, do you want an agent that could like run a robot and open the door, or do you want an agent that could like psychically make the door open? That'd be very annoying for us because we like the doorknob and we want to live in a world of doorknobs. And so I think that I get pitched agent protocols every freaking day of my life, and I have repeated the same thing to every single one of those people, which is like, we already have what we need. Like, gotcha. So would more TPS be good? I mean, yeah, maybe in the future, but like we haven't really saturated it yet. So I think we have everything we need. I think now it's just like, just more training, more time, more compute, and these things will get there. But I feel like crypto is kind of a solved problem, and like, I can just throw like an RPC key at my agent and it can do literally anything and everything I'd ever want to do on chain. So it's not a problem to me.
Yeah, and I think we'll also witness a bifurcation. A lot of people in crypto are excited about, okay, agentic commerce coming to crypto. I think that's going to go the way of the incumbents, to be honest. It's like the card networks, the banks, the PSPs, the large PSPs. Why wouldn't you, right? If you're a consumer and it's like, oh, book me a flight and a hotel for a vacation, that's a consumer problem that I think the incumbents will do really well. Machine to machine, I think that's where things get really interesting, right? So that's where actually you do need programmability, high frequency, all sort of new interactions between these agents. That's where crypto is going to play a role. But yeah, on agentic commerce, I think that's going to go. That TPV is going towards the incumbents.
And most of that machine to machine is going to be like code that the agents might have written, but it's not going to be like an LLM waiting for a response. It's just too expensive and too slow, and if you could code that workflow, it can be instantly responsive at like an HFT level,
Yeah. Okay, open systems can create transparent and audible record of what an agent has done, but in financial systems, discovering misconduct or error after an irreversible transaction, it may be too late, right? I mean, David talked about this in his initial talk as well. So from your perspective, what infrastructure do we need to control or verify that agents, there's verification before action in certain financial transactions, or how do we kind of see the controls necessary in that kind of instance?
I kind of said, I think that I believe in decision fatigue, but if we're talking like lots of money, like $1 million transactions or like big investments or whatever. I think we're still away from people trusting agents to do that. But definitely, like we see a lot of things like MPC or like Lit Protocol has an MPC thing where like it won't like actually send through the transaction until there's an approval, or you can set up like Gnosis and have like a multi-sig kind of thing. And so we're seeing a lot of this already, or people at least attempting it. Although I think there's still like a volume and problem. It doesn't like, do we need new tools and infrastructure? I kind of feel like this stuff is already working, and it's just more about like we had a lot of problems with like the agent buying the wrong version of a meme coin, because like there's a billion of them and they're all the same. So then you have to create heuristics, but then there's people scamming the heuristics to like try to get look at the liquidity. This one looks legit. And so like it's just like stupid problems like that, but also look at humans. They fall for this stuff all the time too. So I think it's a lot of the same. Basically, if we can solve the human UX, like I think the agent UX we get for free.
Interesting.
A big one is privacy, but I think that's obvious even in payments for crypto, right? It's like you can't do any meaningful commercial activity on a blockchain without privacy.
The thing that you said though, like Stripe is going to win the agentic payments because they already won the human payments. Like there is no agentic payments. Whoever has the trust is going to get is going to win.
They're just an extension.
Yeah. And they also own Privy and already have agentic payments. So why wouldn't I already have Stripe,
Okay. Well, let me flip this around some. When we look at the intersection of AI and digital currency, what are the problems or questions or opportunities that you guys are really focused on? Do you see, is it just, a matter of this is an infrastructure and we can leverage this and it's wonderful that it's here and it's going to kind of allow us to train better and, maybe help agents, transact faster than they would have if we just only had traditional finance? Or are there kind of larger questions, maybe more technical questions that you're thinking about? Start with you.
So for me, I think AI and broader blockchain, there are three things. First thing is it's a really, really good, one synergy is interoperability. So I think one bottleneck I have been working with industry is how do you continuously learn stuff? How do you really get knowledge? How do you keep a full agent system, have entropy, have knowledge, keep exploring stuff? So all the exploratory stuff, I think one thing we realize is you really need to be able to synthesize, understand, and that's where a lot of time we need human in the loop, especially in finance because things are so opaque. Whereas we have making progress using pretty much on-chain data to make the result more interpretable. For instance, if you are a central bank, you worry about systemic risk. Typically, it's very opaque. You don't know what happens. But now, if maybe you see the physics is if 2 or 3 market maker become stressed, then in this on-chain, you realize, then the whole market will be stressed. Then you have a new knowledge you didn't have before. Then you can just do more things. So first thing, I think on-chain data can solve a lot of bottleneck on how, when we have a very limited environment, to better synthesize financial knowledge, how we can make sure we have entropy in such a small sample for finance. I think second bottleneck is, I think part of what you cover for your spamming by PR thing is really, it's not only about blockchain, but you need better HCI in the sense of like human AI interaction, because they are really good at doing many things, but in the end of the day, you have to co-evolve with them. You have to be able to internalize what they create, and you have to be able to take even more leverage. Otherwise, you're just going to be driven by AI. Now you're driving the AI. So I think one thing people are working on should be that. And third thing is in this, you realize there's also way more scientific problem created because of this. For example, when we collaborate with quantitative trading fund, you realize the agent can generate a lot of new ideas, but then how do you have a taxonomy of what is the equivalent class of different ideas, which is very abstract. And then you can make sure AI are doing orderly search and they don't actually do wasted work. So you actually see there's a lot of new scientific math problems, stats problem coming up. So I think the third opportunity for me is how do you leverage the openness of on-chain stuff to better improve financial interpretability, understand the physics of finance, train better model. Second thing is how can you improve the knowledge creation process, which is how you have this HCI improvement to have the better way for human to co-learn with AI to synthesize. And third thing is how you, what is my third thing? Actually, I forgot, but yeah.
Is this a secret quiz? Go ahead, Sean.
Yeah, I mean, I think we're working on something that is still very experimental, but I think points to something that I could see being very interesting in the future as a hybrid of AI and blockchain, which is like basically like crowdsourcing our access to compute to create, solve, or do things that are actually like profitable to all of us. So an example, like right now we're working on this thing. There's a proximity price conjecture, which is a Dan Bonnet thing over here. About, well, it's a lot of people, it's a long conjecture, but the idea is like, well, could we prove this fact about Reed-Solomon error codes, which is an extremely hard problem, and so underneath that, there's $1 million prize if you solve it, so now there's this financial incentive. So what we're working on is a pool that where people, it's deltastar.computer, but you can go and you can download the skill into your agent and you can make $1 million by throwing compute at this problem. And we're also working on this for Eliza now in version 2, where we're like, this is not, we're gonna try and build something new with this, where we are throwing out a skill where people can contribute to our project, become main contributors, and actually earn money from that by just throwing their compute at the problem, and the skill that they're downloading is like, I know what I need, so I'm writing out a very detailed skill, and they can just go and like press a button in their agent, and now they're participating, they're contributing to open source, and making money. And so I could see this being like a whole, like, this is the future of mining. You're like, screw, running a Bitcoin miner and doing a hash algorithm. Let's go solve some real math. Like, let's go prove something fundamental about the universe that's like very valuable. And if we prove that, like, oh wow, snarks get faster. We actually prove all these downstream conjectures. Like, this could be like a huge thing. It's an extremely hard problem, and I'd give it like a 1% chance of success. But out of that, we also proved basically all of the snark math and all the Stark math for the verified ZKVM Ethereum Foundation work. And like I am extremely bullish on a lot of, like, not all problems, but a certain set of problems being very attackable right now just as a function of compute. So I'd say that conjecture is extremely hard, 1%. But there are a lot of 100% chance conjectures that are just sitting there, and that could. This could have like a massive impact on everything, I think, especially if you could like financialize and reward people for donating their compute.
Yeah, absolutely.
Yeah, so if you buy the idea that agentic output that is not verifiable is not useful to society in one way or another, maybe you discover it later, then I do think that we're going to transition from even software as a service to liability as software. The idea being that if you're selling the agent, you're also going to be able to underwrite the outcome. We're seeing glimpses of this, 11 Labs with their audio agent, Cognition with Devin. I think that's a broader trend. And so something that's interesting, especially for the people looking at the intersection of AI and digital assets, is going to be what is the liability underwriting model for payments once the agent is in charge. Every other revolution in payments, from Bank of America dropping the cards on the merchants and consumers in Fresno, to eBay with trusted sellers and PayPal. Every iteration was essentially a new way of building trust with the new technology. I think we haven't seen that in agentic, and so maybe it's going to go the way of the incumbents, but I do think that's a really interesting area of thinking through. If I have better telemetry, if I have better measurement, if I have better data, can I actually stand behind what the agent is going to do behind the payment, behind the commerce flow?
And do you have any sense? We were going to have someone from the law school here, but he's across the hall. But I'm curious, just when it comes to things like liability or accountability with agents and like where that's going to lie, do you guys have any sense? I mean, any early signs of where that liability will be? I guess specifically also in financial transactions.
It's definitely going to go to the people running the agents. Like if you run any tool or you do anything from the legal perspective, if it's running on your computer and you're approving of it, you are legally responsible. I think at a corporate level, this could be more who in the corporation is legally responsible. But I also like, the AIs are not going to make the dumb mistakes in the future. They will make like really, really like socially engineered dumb mistakes, okay, wow, we just lost millions of dollars on some kind of thing, but probably there's some bad actor involved. Like they've gotten to the point where they're like, not just blindly YOLOing stuff out. And I would trust in the long run that the models can, like, mostly if I tell it to do a thing, it will do it. I trust that if I tell it to do a thing, it will do it, especially if it has some way to review that. But I don't trust it to, like, not open up a whole new attack surface to people who can figure out all new kinds of, like, that's the can of worms, I think.
Yeah, I mean, on the retail side, at least in the US, maybe Europe will take a different direction, but I think people will want commerce to flow, and so, the consumer will always be protected, whatever the agent does. B2B, I think it'll depend on the leverage between the two parties and who's actually, again, the best one with the better measurement that can underwrite it more fully. I think that party will take the risk. Or if they can't because they don't have the balance sheet, then it's going to be the other side. But I don't think it's a big problem.
Okay. All right, we're going to turn this over to the audience now. And I will maybe get Paul to see if he can pass a mic around. Looks like I think we can just maybe, oh, he's got one back there. Okay, give us just 1 minute. And we've got a question up here in the front, Paul. We're putting him to work today.
I'd like to sing a little something. All right, who's got a question?
Right up here in the front.
All right.
Hi, my name is Lakra. I'm coming from London. You are talking about agents, trading agents. Let's say short term, okay? But you've been talking about men handling an agent. How about me handling my trading agent, you handling your trading agent, a third person handling a trading agent? Each of us have our own good incentive for our agent, but at the end of the day, we want have money, alpha, whatever. I'm coming from a background. At some point, they are working together. What are your thoughts about creating some kind of ecosystem, colluding, how a lawyer would say, and at some point human will lose because I've seen that with Amazon and other retailers, agent getting a deal between them, to all of them getting the maximum incentive, but we as human we will lose. How can we? I don't know. What are your thoughts about that? Thank you.
It's still early days. I think that we're seeing a lot of games and simulation and this happening there, but like out in the market, I think that there just isn't enough. Like basically people don't trust the agents enough. They're not using them this way to really necessitate it. But like I think an example in my life is like I collaborate with other engineers on GitHub and we all are very agentic. And our agents are colluding to do everything, right? They're constantly coordinating, interacting with each other. They each have they give themselves names or, and what model they're running. And they're just like GitHub issues with hundreds or thousands of comments on them, GitHub discussions with interactions. So I imagine the same kind of thing will happen in financial markets once it makes sense to do so. It's just that like code is the thing that agents are really doing right now. And I'd say finance is probably the next big thing the big companies are eyeballing. But inside of that, like they already coordinate extremely well. And then they also do things, but this is not just, I just don't think there will be an agent-only protocol. I think it's like GitHub is perfect for us. I can go and see all of that. I can read all of it. I can even comment and interact with my agents or the other people's agents. Sometimes their agents DM me on Discord and are like, hey, can you do this? Like seriously. And it's not, like this stuff all works today very well. It's like a trivially solved problem. I'm surprised more people aren't really investing in that side. Like multi-agent coordination is basically done. Even inside of modern Codex and Claude, if you spin up a bunch of different like chats, the Codex agents will actually collaborate with each other in that as well. So. But
are you worried that they're going to be collaborating or colluding to the detriment?
No, I would say not at all, because those companies are invested entirely in making sure that doesn't happen. Like the entirety of their RLHF, GRPO, post-training, blah, 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 all the fancy things is to make sure that it does not do crazy stuff you wouldn't want it to do. And even if it can predict very unlikely tokens once in a while, it almost always corrects itself to being extremely aligned. Like I have a whole other thing, I don't really believe in alignment, but in terms of like, does it do what I want? It has never been closer, and I think this is just like, to me, a relatively solved problem.
Just one last idea. So we are assuming here, I'm a data scientist, assumptions are everything. We are assuming here that the reinforcement learning with human feedback, would have the good defined as the same good for all of us.
There is no goal.
Forgetting about somebody can be evil enough to define the good against the other people.
Right. So I don't actually believe in alignment because there's no goal and there's no reward inside of prediction of LLMs. We do have like a post-training now where we have a reinforcement learning pass, although some papers came out and showed that you can actually replicate all of that more efficiently with fine-tuning. But basically what RL is doing is trying to look for more unlikely opportunities for tokens across millions or billions of rollouts to try to explore spaces that have not already been explored for reward. However, that's like an extremely thin process at the end. And generally, like if you look at the distribution of likely tokens that it can predict next, they're almost always like not going to make it lead to do crazy things, especially in the limit. Like I just think that like if you look at how the things are distributed, people tend to make the fallacy either that they could do very bad or unaligned things or that they can do very magical things. And both of those are like very hard for a model that's been extremely post-trained into a very narrow set of token options. It can't predict things that it hasn't been trained on essentially. So I just don't see it going unaligned.
I have a different take. So I think what you say is, so there are different, we already call algorithm collusion, which is really if you have enough algorithm trying to optimize themselves, they may stop at a local point where it's actually not best. Like it looked like collusion, but actually, so there are three things. First, you have algorithm. They don't talk to each other, but somehow like the market put them in a position that they have some rent. This already happens a lot. For example, for market making, collocation, if you really understand market, it happens a lot. So the second type of more manipulative thing is, normal is, I also don't know much of information, but I can predict people's next move. For example, if you're my customer, buy an option, I know you close every Friday. So this can, with AI, you can squeeze more dot out of those flows. I think this will be worse. And the first one, I don't know if it'll be worse because currently it's already going on. And the third thing is, if you talk about pure AI, it's really about, it's pure statistical or pure game theory where you allow them to message each other? If you allow them to message each other, it's tricky. Like if they talk to each other, coordinate based on non-market signal or coordinate based on message, I think they're potentially a legal issue and worse. But then this is already happening. So like if for algorithm to even there seems competing, but eventually all the algorithm we're both optimizing, we're in a settle point where both of us have no incentive to improve, but we're together extracting rents. That's already happening.
I want to push back. Like LLMs are frozen and they don't improve. They don't learn. They're trained and then they're frozen. This idea that RSI is not here. The effect that we're seeing of recursive self-improvement in OpenAI and Anthropic is them buying lots of companies and absorbing more data. It's not RSI. We're not even close.
But if a Gen-Street trader has the best model, they can, so for example, they already are the best trader to squeeze few dots, like to synthesize, figure out where the flow is coming from, how I monetize that. If they have the AI, it's not necessarily the model itself is improving, but they're accumulating more knowledge, they have better harness, and they just keep including more knowledge. And that's where like you have an issue.
All right, do we have any more questions? Yep.
So a different type of market manipulation is you did some analysis and said like 30% of the shows were successful and there were others who were like 90+% successful. Did you do any kind of training on what their behavior patterns were, their messaging, and what was actually making them successful and see if you get an agent to behave in that way?
Well, yeah, I mean, so people are coming into a chat and they're saying, hey, I bought this token. Why are they doing that? Because they're trying to get everyone else to buy it, right? Because then the number goes up. So there's like a lot of adversarial incentives. And the people who are 30%, they're trying to steal your money and scam you, like for sure, especially in a bull market.
Everybody is. But.
Yeah. And the people who are 90% are also just trying to get the number to go up so they can sell on your head. Like, they all have the same incentives. Like we could go in and say like, okay, we can like, so what we did was basically the way I did this was took the whole, all chats out of Discord and then ran it against our extractor and then looked like, did it actually extract? And it got to the point where like, okay, this is about 98% of the extracted calls into functions. And that like, it works well. Now I can only as a human read the chat. The AI can't infer anything beyond that, right? Like, it's only we're not going to understand the psychology of those people. But in the limit, it's just doing an extraction job, and then it's just pure statistics. There's not really.
So you didn't feed anything into an LLM and see if an agent could repost and see how it could show.
Oh, I mean, we did definitely like a lot. There were a lot. Like AI XBT was a really popular one, which is like an AI that's shilling, which was like directly changing markets. And there was a lot of questions of like, is the guy behind this just posting? And we're pretty sure he was just posting a lot of this stuff. So, and then also, it was kind of doing its own thing. There's a lot of this. I just think that the LLMs that are like we're getting from the big companies are not disposed to being very like, they're really fighting against me, and I have to really gaslight them to convince them to do anything remotely nefarious. So that's my take on it.
First, thanks very much, guys. This is a fantastic panel. I'm not calibrated really in this space, but everything I hear about on-chain agents is that the number of them is still rather limited. What do you think the reason behind that is, if that's correct? Is it a UX problem? Is it lack of alpha, like Professor Zhu is saying? Is it lack of an incentive model, like you're pointing to, like putting your compute to something useful? What do you think?
I mean, big part is a bear market. So I think a lot of the talent has moved over to AI for good reasons. I would say the next one is also that a lot of the things that you can imagine some of these marketplaces being really good at don't exist yet. So the data market we were talking about, it's like the likes of Merkers and others. It's companies. It's not yet at the distributed scale that it could be maybe. So most of these protocols, including like things like X402, the volume is like meme coins, the kind of pump and dumps that you've seen in crypto before. It's not like, oh, I can, my agent can be more effective by buying this data source and using that as a useful insight. Gotcha. We're not there yet. It's super early days.
Gotcha.
I think alpha.
Alpha?
Yeah.
Okay.
They can call and do anything if they have the alpha.
Right.
They just don't magically have that.
Gotcha. Thanks, guys.
Hi, thanks again for being here, guys. This has been really informative for me. There's a lot of information that I'm trying to soak in and kind of parse out. And there's this tension that's going on, which is really interesting to me, which is, given the quantitative sort of information, the quant information, being able to do the mathematical pipeline. And does it learn by having that addition of any LLM type of learning? Does that benefit the sort of quant analysis in the determination, in like price determination or something like that? And I was really interested because the two of you were kind of bouncing back and forth on this. And if you could just kind of clarify for me how you feel about that sort of having that deterministic math pipeline that an agent holds, and what sort of soft information or what could the LLM bring to bear on the quant itself?
Insider information and access to early information. Like, okay, you guys know what RickBot is? RickBot is a trading bot that's in almost every DGen Telegram. And the guy behind that is absolutely using that to make insider trades constantly. Like, it is an infinite money machine. If Ansem posts anything in any of these chats, he instantly buys it and will always make money. So there is, like, if you can take an unstructured call from a person and turn that into a structured function call that actually makes a trade, like, yes, if you have access to insider information, you can make money with LLMs. It's the only way that I've seen so far, other than the, like, other things that are all trust, basically variations on the same thing.
Not that different than traditional markets.
No, same thing, just smaller.
So I think for me, if you specifically ask for quantitative trading, I wouldn't say it's more about, because insider trading is not necessarily quantitative trading.
No, it's like the opposite.
For me, is quantitative trading is you can think the pipeline is really do you have the best alpha signal, which is kind of how good you can predict things, right? And then how well you can monetize that thing. I do think, and those are both rely on a lot of quantitative researchers' effort and also quantitative developers' effort. So I think overall, I do think for both domain, you can really see they have advanced quantitative research by a lot. For example, alpha generation, there are two parts, right? Either you have creative idea, you have a deep understanding, you figure something out. Potential, I think and that's typically when I was in quant industry, there's a lot of dirty work, which is even you have idea, it takes forever to experiment it, to scientifically find that. And now you can do a lot of things at scale, which is really changing from like, kind of back then you don't have electricity, you have electricity. And also there are alpha part, not from the idea, but from the modeling. I think that part is like you can imagine from linear model to like GBM tree to like neural network, and now people are training their own like bigger models. I think as of I know, like people are adopt the LM idea, but they are still training their statistical model to predict return, and that has also like make a lot of progress in the past few years, but it's still like not non-transformer neural network. And for monetization and those things, it's also like you can imagine both the infra and the research has evolved a lot. And I do think it's for quantitative researcher, and it's for especially senior quantitative researchers, they're at a stage where they can improve a lot. You can think the whole anything quantitative as this game, no matter pre-training or quantitative trading, is you have the best infra, you can do experiment quicker than anyone else, and that experiment has to be effective, which means that you have good taste, you have the best metric, you have researcher keep making it have the best margin improvement, and then second thing is you have the best evaluation, because experiment without evaluation is nothing. So like it really, like the senior people have the best evaluation, and that thing has changed things AI, because for what we mean by overfitting has changed a lot when this things you create 100 times, 1,000 times. And then you can imagine for the firm, now they have they're going to have like the better experiment, and the best research are going to make their each loop improve better. And then the difference between different firms is going to be exponential difference, because they're going to do things quicker. Each part are going to try things better. So that's my take. Yeah.
Thank you.
Okay, if there's one final question, I think we can squeeze it in, or otherwise we will thank our amazing panelists. We'll close exactly on time and take our next break. So thank you, everybody.